with the changing market, what are you investing in, like with this current market?
Yeah, this current market right now, I'm really looking strongly towards having a very, very diversified portfolio for starters. And because I think one of the things that I find really fascinating is how sold people get on a certain path that might happen. We're having inflation. I got to buy gold. I got to do this and that. Okay, that seems like a good path. It seems like a good probability. But there are more variables happening this year than in any other year I can ever remember. When you have the Federal Reserve getting this aggressive with their conversations and their possible, fighting inflation, you have this inflation this high, you got a reopening, you got a pandemic, you've got the possibility of another variant slowing things down, you've got an election on top of that. You got supply chain constraints. I've never seen anything like this. You've got a whole workforce that's shifted to a certain degree. We've have some of these shortages in labor are because there have been massive retirements. People have accelerated their retirements 2, 3 years in advance. These are all variables that you're going to have a really hard time figuring out the direction. And you might think, hey, financials and these different things are the greatest thing on since sliced bread, but we have 75% of our assets in the S&P 500 and the total stock market index, just because of the fact that I don't know for sure where things are going to go this year. So that's number one. And so then the rest is decided on, okay, what do we think might do well? I like semiconductors. They haven't outperformed so far this year. The index that I'm using right now is SOXX. It's an iShares semiconductor ETF. I think it's down about 1% more than the Vanguard Total Stock Market Index. It's up today, up 2% today. So maybe we're catching up. Anyway, and so, because semiconductors are pretty unique, everything you read is always a shortage, 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 shortage. And then Taiwan Semiconductor, released their earnings, and they did fantastic actually, and huge demand. And man, what a group right now! And it's sort of isolated. You can't open up a semiconductor company tomorrow, and can create competition. So they have trouble meeting the demand. I think that eventually, works its way out. But could be a good year for semiconductors. It was last year. I think that index was up something around 60% versus the market. So I like that category. I like something that has a lot of demand, irregardless. It's down a little bit more right now because some of these companies have higher multiples and there's a shift towards kind of value, but it keeps coming back, which I like, including today. I mean, the market's down today and that's up, so that's good. That's a good sign. I like Apple personally. It's one of my other targets. I think, I bet you they had a good fourth quarter. I'd like to see what's going to happen there. They're sort of an all-weather stock. They're selling at 30 times earnings, so that's pretty high. Not as high as a lot of the little stocks, but so they're taking a little bit of a hit here with this, flight to values, flight to inflationary environment. But I think you just wait for them to churn out their earnings, which have been pretty good. And they have a nearly cult-like following. People buy Apple, just because, and they come out with something new, they buy it, and they're working on these new VR goggles, right? And they've got the Apple Car out there. They're buying back $90 billion worth of their shares, this year. It's just, I think it's a great story. They have great cash. They're not really reliant upon, borrowing to run their business. So higher interest rates won't affect that as much. So, I think they've got some headwinds in front of them, but I like that company. I think that's a good place to be personally. The targets are pretty small and few in between right now. Things that I just really kind of believe in. Mostly, we're staying very diversified. And again, that's been my drumbeat for quite a while right now. I think you've got to be really careful about getting too narrow here. You might look right for a while, but then all of a sudden, inflation turns out to not be the big boogeyman people thought or what have you. There's a lot that can happen, and I would be watching that supply chain issue because I think once that resolves, we will see, inflation moderate pretty rapidly, and maybe even to the point where the Federal Reserve doesn't have to do as much aggressive work against inflation as thought. That would be great for companies as a whole. If you're on that inflationary side with all of your gold and all of these other value stocks that do well in inflationary environments. So I don't know where it's going to go, and so I'm going to buy everything and let that go. And um, VTI is down 2.7%. A lot of these targets, there's some that have done better. Mid cap value, small cap value, large cap value generally has done better than VTI. But man, there's a lot of pieces out there that have done a lot worse. That's where it'd be really hard. It's sort of a minefield, in my opinion, to get out there and try to figure out what's going to do well.